Welcome to the Riskwiser Zone. I'm your host, Louie. Today, we're diving into a complex web of global events that are impacting markets and economies around the world. From Europe to Indonesia, we're seeing significant shifts in policy, trade, and energy production that investors need to stay on top of. Let's start with the latest news from Europe, where a severe heat wave is gripping the continent, putting pressure on power grids and energy markets. Temperatures are expected to exceed 35 degrees Celsius in Rome and Milan, with 40 degrees possible near Bologna, the island of Sardinia, and the southern region of Puglia. This has led to record cooling demand, with French and German day-ahead electricity prices surging on Monday. Meanwhile, Indonesia's energy ministry has directed miners to urgently boost domestic coal supplies amid rolling blackouts that have hit the country. The government has ordered miners to supply an additional 2.7 million tons of coal to power plants this month, citing a ministerial decree that allows the government to force producers to prioritize domestic sales if local needs are not met. This move comes as Indonesia, the world's top exporter of thermal coal, has sharply cut its production this year by tightening government-issued mining quotas in an effort to boost prices. However, power blackouts have triggered scrutiny over this policy, with some arguing that it may be exacerbating the energy shortage. In other news, Europe's economy is showing signs of resilience, despite the ongoing US-Iran conflict and trade tensions. The latest data from the Eurozone suggests that the region's economy is growing, albeit slowly, with services and manufacturing activity picking up pace. As we navigate these complex global events, it's essential to stay informed and adapt to changing market conditions. At the Riskwiser Zone, we'll be keeping a close eye on these developments and providing you with expert analysis and insights to help you make informed investment decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of oil prices and their impact on the global economy. Recent developments have seen crude oil trading near $78 per barrel, with investors closely monitoring the situation in the Strait of Hormuz, a critical waterway that accounts for 20% of the world's total oil exports. The U.S. has granted Iran a 60-day sanctions waiver following initial peace talks, which led to a more than 3% drop in oil prices on Monday. However, market sentiment remains cautious due to concerns about the stability of the week-old accord and potential disruptions to shipping in the region. President Donald Trump has warned that military action could resume if Iran interferes with shipping through the Strait of Hormuz after Tehran announced the closure of the key waterway. The situation is complex, with analysts noting that a complete reopening of the strait will require careful coordination and may take time to achieve. Despite the recent slide in oil prices, global oil inventories were depleted during the extended disruption of shipping through the Strait of Hormuz and will take time to rebuild. Some experts, like Saudi Aramco's CEO Amin Nasser, have cautioned that disruptions in the strait could delay a return to stability in global oil markets until 2027. Morgan Stanley has described the oil market as being in a race against time, warning that factors limiting price rises could weaken if the Strait of Hormuz remains closed. The brokerage notes that higher U.S. crude exports and softer Chinese demand have helped absorb part of the supply shock, but global supplies could tighten again if disruptions continue. As we navigate this complex landscape, it's essential to consider multiple perspectives and stay informed about the latest developments. We'll continue to monitor the situation and provide updates as more information becomes available. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a closer look at the current state of global markets. The ongoing US-Iran peace talks have been making headlines, and investors are keeping a close eye on the situation. According to recent reports, gold prices have remained steady as investors assess the progress of these talks, while also considering the potential for a Federal Reserve interest rate hike in December. The U.S. has waived sanctions on Iran for 60 days, following the first round of talks under the nascent peace deal. However, Iranian officials have denied discussing their nuclear program, which could potentially impact the outcome of these negotiations. Meanwhile, Fed Chairman Kevin Warsh is set to deliver his first testimony on monetary policy before Congress on July 14th, which may provide further insight into the central bank's plans for interest rates. In other news, Chicago Fed President Austin Goolsbee has stated that he is focused on determining whether high inflation will persist or recede as the effects of high tariffs fade and the conflict in the Middle East is resolved. Traders are currently pricing in an 89% chance of an interest rate hike in December, up from 61% before the Fed meeting last week. As we consider these developments, it's essential to remain cautious and informed. The global economic landscape is complex and ever-changing, and investors must be prepared to adapt to new information and shifting market conditions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.